Tech tumbling. Facebook, Netflix, Amazon, Apple, Alphabet all take a dive yesterday and have been taking a dive in the last month, coming on the heels of what has been a terrible month for the technology industry. Both Facebook and Apple down better than 10% over the last month. Joining us right now is SkyBridge Capital Senior Portfolio Manager Troy Gayeski. And Troy, good to see you this morning.
Great to be here.
Your reaction to this carnage we've been seeing?
Well, look, I think in regards to what you discussed on trade, there's one other factor to remember, and that in the big picture here, for quite some time, capital markets outperformed corporate fundamentals, which in turn outperformed the real economy. And a lot of that had to do with the Fed's hyper-loose monetary policy, not only here, but with the ECB. And so what you've seen this year is as the Fed has tightened, and obviously they're winding down their bond portfolio, we've seen a significant multiple compression in equity markets, which is very healthy for the longer term. But in the shorter term, we think volatility will continue to be elevated. And you've seen a lot of deleveraging, particularly in the hedge fund industry, the last 6 weeks, which have added to this very ugly tape, not only in tech, but across the board.
Well, do you think the Fed's going to go ahead with multiple rate increases next year, or are they going to take a pause?
So, look, they're going to go.
Or are they going to indicate a pause in the next couple of weeks?
Let's start with the probability of outcome. So December, they're more than likely going to hike.
Right.
And then Clarita started to walk back. Powell started to walk back the potential for more aggressive hikes. So we would say next year is more like 1 to 2 hikes at this stage, given the softness we've seen, not only in the U.S., but overseas. That unto itself, though, might not be enough to get the bull market really supercharged again unless you get a resolution for trade. The broader point here is that the years of massive outperformance from equities versus corporate fundamentals and real economy are over. And if you look at next year, if you're talking high single-digit earnings growth, that's probably the high end of return expectations, unless the dollar really tanks, which could cause a little bit of upside from there.
So we're going to see a real slide in corporate buybacks of stock, which was a huge mainstay of the last year.
Yeah, so in terms of buybacks, the pace has to come down, right, from where this will be the peak year in terms of buybacks. Even though quite a large amount of capital has gone into CapEx, as you discussed before, that's trending down. So that will be reduce the buying power of one of the most steady buyers throughout this whole bull market.
The Journal is reporting that Apple suppliers are facing turmoil. Let's take a look at Apple for a second, because it's really been taking a massive decline. The result of the technology giant's decision to cut production orders for all 3 of the iPhone models unveiled in September. Is this a sign of bigger problems? I got to give Dan Niles credit again, because Dan Niles joined us back in October, and he was very, cautious on Apple before the company reported. He was right. He talked about a supply issue, and that is an issue, but now you see the suppliers having their own issues.
Yeah, the whole supply chain's getting hammered. So, if you look through it, right, you had investors that were extrapolating several quarters of extremely strong numbers, basically not into infinity, but at least over the next several quarters. And what you've seen is you've had a global slowdown. Remember, not only the U.S., but China slowed down significantly. Europe's way off their growth rates of last year. A lot of the top-line revenue numbers have not been hit, and, that's flowed through the stocks. And the other point we made, last time around the show was how crowded they were, right? And not only Apple, but Netflix, et cetera. So, the downside potential in heavily crowded stocks that miss their fundamentals is rather enormous compared to uncrowded positions.
And then there's Facebook at a critical turning point. The Journal is reporting this morning that CEO Mark Zuckerberg plans to take a more aggressive approach given the recent scandals hitting the company. What do you think about that?
Well, look, so from a hedge fund standpoint, most hedge funds liquidated that position back in Q2. The view was that we had peak social media back in Q1 of Q2.
So have you been short these stocks?
We're not short. We've been out. So we had a little bit of exposure early in the year. We've been out. Right now, it's not quite a high attractive risk reward to get overly short. You want to be defensive. You want to be in cash flow oriented positions, and you want to bide your time to start deploying capital once we get a floor under the markets. Because right now we're about to retest lows, and there's a chance we go through there. If we do, sit back, wait for things to stabilize, and into early next year would probably be a better buying point.
Yeah, but if you look at Apple, getting to your cash flow point and quality, people want quality, especially in the tech space. Looking at Apple trading at just over 13 times now, they have a ton of cash on the balance sheet. They're buying back a ton of their share. To Steve's point, they're going to buy back about a quarter of their shares every year for the next 3 years. Wouldn't this be a time to get into Apple?
Not unless you face tariff risk. And see, Apple has been immune from the tariffs so far and kind of been immune from the trade fight that the U.S. is having with China. However, if we move ahead and there isn't a resolution, Apple has nowhere else essentially at this point to make that iPhone but
right.
China.
Yeah.
And so maybe that's part of the reason people are selling.
But a real fundamental problem with Apple is there's not the wow factor anymore. They get these nice little improvements on the 11 and 12 and the 21, whatever models they're bringing out. But what's the big leap forward, so to speak?
Well, it's unclear what the next transformational technology will be. To your point, every change they've made is incremental. Back to the point you've brought up, remember, there's short, medium, and long term. So as a long-term investor, this is a good entry point. However, you have to look at the short term, and the technicals still look pretty ugly. It's still heavily owned. And Apple, even though they've played their cards better than most of the FANG stocks in terms of the political environment in Washington, you know, if the trade war takes a turn for the worse, there could be supply chain disruption, as you've been highlighting.
And one thing I'll point out about the whole Mark Zuckerberg fight, again, the guy was busy learning Mandarin and reading a book every 2 weeks. And essentially, it seems like now that he's angry about the response to all the pressure from the outside of the company and the missteps within it, it seems it begs the question of where have you been the last couple of years, number one. And number two, you have the founders of Instagram who are really the reason for the success of that part of Facebook's business. They're gone. And again, will Mark Zuckerberg and Sheryl Sandberg foul that up too? Is another question.
Well, look, I think to be fair, you know,
what's your point of view?
Yeah, no.
Well, it's a great
point. I mean,
I said this yesterday. A friend of mine said over the weekend when I was, did you read the New York Times article about Facebook? And he said, yeah, have a drink and join the party. This is what everybody's known about the company, the way it's run and the way it operates for literally, I don't know, over a decade.
Yeah, well, they've been allowing this stuff to go by and not do anything. I mean, even when it comes to regulation, which is a point you've pointed out over and over again, that they should have been policing themselves.
Well, we were laughing about Sheryl Sandberg writing that book. Yeah. Again, telling women how to live their lives. And it's like, how about doing your job?
Well, the one thing we say is, to be fair, creating a successful tech company is very different than managing the political environment and regulatory environment in Washington, right? So that's a tricky hornet's nest to negotiate, as Steve can highlight, I'm sure.
Real quick before you go, Lowe's, Kohl's, Best Buy, Target, all reporting earnings. What's your sense of the consumer?
So the consumer is in fantastic shape. I mean, even if you look at withholding data, which is one of the most real-time indicators you have, there's a chance we hit the similar withholding this year as we did last year, which is remarkable, because even though the economy is doing better, remember, as the cycle matures, it's harder and harder to create more and more jobs with low unemployment. So we think consumers in tremendous shape.
That's what I think, too. I mean, but we'll see. Troy.
Recession risk low, but that doesn't mean markets are destined to go up.
Good to see you, Troy. Thanks so much. Troy Gayeski there.